Hi guys, quick update here for the SP 500. The long term, on the short term and medium term wave count is 20th of April 2025. Hope everyone's doing great. So if you want to join the group, everything's here. It's cheaper over 3 months and you can pay via crypto if you want to. We're doing a special offer whereby if you buy the full version of the masterclass, you get free access for 3 months as well as the mortgage amortization course. Now, this is one of the most volatile sort of episodes that we've had since 2008. We've nailed this move absolutely perfectly. So videos are shared twice a week as well as ad hoc updates. I can just show you some of the screenshots. These is the timings that you see here are UK CET time here, and we've discussed some of the messages that we share. Back in SPXL, selling is more panicky and forced. That was one there. Then here we've sort of closed out of SPXL on the 8th of April. This is just below, just before 4 o'clock here, and we've got another one here on the 7th of April. I think we are bouncing a day, gap down, reversal. So we discussed the opening drives and the various open auctions and the different market openings. There's about 32 different openings. We discuss all of that on the auction market theory. It's very useful for futures trading. So we caught the reversal move on the Monday, and we discussed some more ideas here, which you can see on the 10th of April. We're going to rebuy 518, 515. Don't think we're quite there yet, but we're drifting over. So we discussed way more than that. Those are just some of the screenshots from the Facebook group. Obviously, for the purpose of YouTube videos, I can't really give away more than that, but we discussed all of that. You can see that on the 7th of April, we caught that move there. So these are some of the most volatile moves that we've had since 2008. So this was the period which we were involved in here. We got out of the way towards the top, noticing something wasn't right. It's clear ABC down. We caught the reversal here, sold out here, bought back in, knowing there were too many poor lows down here. We were going to get an oversold bounce, and then lo and behold, we get it. So those are just some of the advantages of being in the group. When the market is this volatile, all you need is one of these moves. That is the return in that move far exceeds anything anyone would ever do on an index level over a 10-year period. So there is advantage. There is an advantage to shorter term trading, and we discuss all of that in the group. But let's just discuss for YouTube our perspective here, medium long term on the S&P. So let's just zoom all the way out. Now, as we know, we've discussed this since the first YouTube video. We said Dow was going to go 40k when the Dow was at 20,000. So we've always known this is like the last sort of cycle, as it were. So we're running that as a 1, that as a 2, that as a 3, 4, 5. Now, we're not fully convinced that the 5 is over. I'm still looking at one more wave up here. To basically complete the end of this cycle and then complete the wave 5, then we do a larger correction. So that's the long-term wave count. There's still one more wave up here. Now, this, therefore, is a wave D position or a wave 4 position, if you will. We've crossed over into here pretty much now. We are long leaps from here as well as SPY ETF. So it could just bounce from here. However, more than likely, given what Bitcoin is doing and a few other leading indicators, and I'm not also convinced about these highs. These are fairly poorish sort of highs here. Whilst it might not be an actual poor high as defined on the masterclass on the ES futures, and probably the high was formed in the New York session, still, that's not really how a market should top in basically a triple top fashion. So we're running that as an ABC coming down into here, and then this is part of a sideways consolidation. Likely a wave B, could also be a wave X, doesn't really matter, and we're looking for another visit of basically 5,000. Now, it could just double bottom here at 4,800. If not, we've got a few targets just underneath that, one of which would be the algo target, which you can see here, bounces off the 50. We know there's an algo forcing this market as best as it can to here. And then there's also a target on the SPY at 4,700. I'm more of the opinion that we break 5k, and then basically we're looking for a squeeze back up, and then the next move up will probably take us to all-time new highs. So I'm still off the belief there's one more wave up here. I'm not convinced this is the start of a very, very large correction. Now, if something changes, something drastic would be a sustained move below 4,500. and continue on moving down. Okay, frankly, I think we've gone low enough. That's why we've been long from the lows there at 4835. It was an open gap down reversal pattern. Okay, so it's open drive, rejection, and reverse. Okay, you always buy the third gap down, especially on the index. Okay, this index loves to make V reversals. However, given the fact that most people are now FOMO'd back into the S&P after panic selling all the way down, you know, to me, it makes perfect sense for a second fear test. So in terms of Wyckoff, selling climax, automatic rally, second fear test. You can't see it clearly on the SPX. I'll show you on the ES and I'll show you on the SPY. The volume is declining though. So this is more retail capitulation that's going to ensue. The market's back open tomorrow, obviously, as well as the next couple of weeks. So between now and the end of April, the end of May, I'm expecting another fake move down into 5,000. Okay, this count only changes. The long-term wave count would only change if there's a sustained move underneath 4,500. Okay, obviously we can't rule that out. Okay, I'm not anticipating that to happen. The FANG stocks look very, very weak. We're going to cover those today. We've been out of those for 6 months. We've already declared very, very long, lifetime tops in some of those stocks where, you're never going to see some of those highs ever again in your life. So we're going to go over that in a minute. But we're anticipating another move down here to 5,000, which isn't really out of the realms of possibility. Now, from a technical perspective, the market has to undergo repair just underneath 5,000. I can't give you the exact level, but once again, once you know auction market theory, once you learn all of this, everything that we've defined here, you can understand why the market has to undergo repair. Okay, now technically, for those who are well versed in market profile and volume spread analysis, you could argue there's repair which has to undergo, well, there's repair from here, and you would be right. Well, the market doesn't have to repair instantly. In this case, I think it will, because going back to 5,000 makes a lot of sense. Second fear test. Most people get more bearish even on the second visit off the move down. Shorts are going to get trapped in the hole, and then you get the vertical move. We could easily be at all-time new highs on the SPX index, definitely by Thanksgiving and probably by Labor Day. However, going back to my point, the double the cause, double the effect, and it becomes exponential. Okay, you can't have shorts continue to shorten the hole on less and less volume. That's not real OTF selling. The OTF move in this move is still up. The smart money overall trend, the OTF move is still up. So that's a whole bunch of locals who are going to get short, trapped in the hole underneath 5,000. But going back to my point, the market doesn't necessarily have to repair straight away. We know there's repair here from C19. That's never, we are now double what we are here, 2,500. So how do we repair the market there? Eventually we are going to repair that, obviously, because we've said once the market makes a new high, we're then going to undergo a very severe correction, which we've discussed going back as 7 years. We've called this move absolutely perfectly. So one more new high, 6666 is very possible. 7,000. I do have targets higher than 7,000, but for right now, we are working between those two targets, and then we are going to undergo a very, very large correction. As an absolute minimum, we're going to visit these lows, but it is going to be worse than that. We are going to go lower than that. So it's the market will eventually repair itself here. Now, so going back to our thought, that is the basic plan. So we're thinking a W coming down, some kind of X or some kind of B, another visit here. I would only change this long-term wave count if there's a breakdown below 4,500. I don't think we're ready for a large grand super cycle crash right now. Everyone's obviously going to call for that, but we don't believe that's going to happen. Now, if I just show you the SPY as well as the ES, you can see the volume here is very low. So the real capitulation has already occurred on this move down here, and we were obviously taking advantage of that on the long side. Because the market is so depressed, it has to have a move to at least the normality. So if that's the normality, the market goes through phases, right? So the market was so oversold here. Fear's 8 times stronger emotion than greed. We are always looking to play that squeeze move. if for nothing else, a short-term trade. SOXL we were in, SPXL and TQs. SOXL was up 50% in 2 days. When the market is that oversold, you have to go long. All the money is made in being long. Leverage long and long. Anyway, going back to my point, you can see the volume here is very forced. If this is just retail capitulation underneath here, shake them out of their long positions, and then we get too many shorts once again, and then we get the vertical move. So because of where we are now, the market was obviously closed, volumes were going to be low anyway, but overall still, regardless of it being a long weekend, you can still see the volumes are quite low. So another visit of 4,500, sorry, a double bottom around 48, 49, and then we get the real move. We have precise targets on the group, and then that basically completes the correction, and then we're going to slowly churn, slowly go sideways, do a little sideways churn, get more and more shorts trapped, and then basically we can start to repair the market and eventually make our way back up again. You can also see it on the ES here. You know, that is just forced selling there. So in terms of Wyckoff, a second fear test down here, you can see the volume just completely dying off here. You know, that was the real capitulation volume here. And, you know, we do have markers which we can't discuss on YouTube. We discuss it on the masterclass as well as the Facebook. We have actual markers of capitulation. Some people use put call ratios. Some people use volatility spread. Some people use the skew indicator. Some people use other internals. We use more market internals. We're more interested in market internals, which we discuss on the masterclass. How do you actually analyze this market internally? If there's 3,000 stocks on the NYSE, how can you actually know when is a good time to buy? You know, what is the sign of a capitulation? Has to be based on the internals, and everything's discussed here. Once again, we've got separate futures modules and options modules. Now, if you want to take the mini version of the masterclass, you're already well versed with all of that. You don't get access to a lot of this. Just have a look through the mini version. I mean, it's cheaper than the full version, but we discuss market internals. You have to know market internals. You know, those are 4 very, very important modules. And if it's important for the ES, once you clock the ES, obviously you can express your opinion on the SPY, options, leaps, and everything else. So it's very important to know the different openings, the different day types, the overnight session, the regular trading hours session. We never really discussed this on YouTube because it's just too much information. You know, we have hedge funds listening to our videos and we don't want to give too much information away. But that is the plan. We're going to visit 5 grand and then we're going to reassess. But I'm not of the opinion a large correction has taken place, number 1. And number 2, I'm not of the opinion from here we're going to immediately go from here. If we do great, we're long SPY. However, I still think there's more churn going on. Now, let's discuss some stocks here. So Nvidia, now this is one of the greatest top 10 calls that I've ever made. We were long from here because everyone could see a head and shoulders. We knew the sentiment was very, very bad. These are pre-stock adjusted. Well, these are post-stock adjusted, right? Because it had a 10-to-1 stock. We were buying at 40. We got rid of it here. Stanley Druckenmiller then sold. He runs a big family office here. He sold soon after we did. And then basically we knew it was going to go sideways. You cannot make money in a sideways market other than using options. That's the only way, by butterflies, condors, that kind of thing. If you're holding individual stock, time is effectively, whilst it won't actually affect your position, in effect, it is decay. It's decay of opportunity cost. There's too much opportunity cost holding a stock going sideways. ExxonMobil has gone sideways for the last 5 years. That to me is not investing. We're interested in making money. So everyone who's been in the group the last couple of years, we've taken part in probably one of the greatest calls there ever. And now, to me, I would rather be safe, and I've been saying this on multiple videos. I mean, we've been out for this almost 9 months now. It's very hard for me to give any bullish count on Nvidia. Too much damage has taken place. There's too much euphoria, and I see no reason why this cannot visit 40 or 400 pre-stock split. Now, the biggest problem, given the fact everyone owns Apple, last time I counted, it's in 150 ETFs. This is a very, very big problem. And we've spoken about this at length many times. We said when the S&P eventually tops, it's very normal between the actual top in the S&P, right, and the top just before the actual top. It's very normal for individual securities to top in the first couple of tops, okay? That's the first top, that's the second top, which we've just had, that's the third top. It's very normal for there to be divergence, okay? It's not common for us to see every single stock take the S&P right to the actual tippity top here, which will be over the next 12 months or so, the next 18 months, the next couple of years. They should top first. That's the divergence that you look for, okay? Peloton, Roku, all of these kind of stocks from the COVID era, you know, a lot of those have topped already, but now we're getting blue chip stocks which are topping. So this is now a very confusing time for a lot of investors because they're seeing their FANG stocks, which everyone is holding, going down, and the index is actually holding up pretty well. And that's the confusion, okay? So you have to be very clear. Are you investing in single securities, which I always recommend, over index investing, which is just lazy investing, or are you investing in the index? We've always said when this third move takes place, we need to be out most of the individual securities and just play the index. It's safer to play the index because you're exposing yourself to 500 and via proxy the more defensive sectors, healthcare, staples, that kind of thing. It's very normal as a market peaks, as the index peaks, for stocks to top first, and that creates the divergence. Now, if you're getting blue chip stocks like Apple doing this over a period of 18 months or a year, S&P doing this, eventually there comes a point where the divergence will effectively break the index. And I call it the fruit basket analogy, where the fruit basket, the value of the fruit basket, that's the index. The individual fruits, the mangoes, the apples, the pears, and the plums, those are the stocks. The stocks have now become incredibly toxic and rancid. Like I said, many of them have already topped in the first crash back in 2022. So the value of the individual fruits are going down massively, whereas the index is still going up. Only so long amount of time can that go on. Maybe another 12 months, another 18 months. Eventually, you know, the chickens are going to come home to roost here on the SPX, okay? NASDAQ have got a different count. If you want the count for the NASDAQ, you can come and join the group. But that is the situation that we're in right now. Make no mistake. Apple doesn't have to follow the S&P to the top. Let's say S&P makes a new high in the next 18 months. You cannot make the call that Apple has to follow it. And this is the problem. Are you investing in indexes or are you investing in stocks? Obviously, it's been following it one-to-one. It's the most valuable company in the world. But now we've had a huge change. Now, as the Apple is selling off and everyone's getting rid of it because it's a toxic stock now, it's an uninvestable stock and it's going to about 60, obviously that's going to cause the selling. And that's been overlaid because, you know, people have to absolve blame. They're absolving the fact that they can't read a chart, so they have to chuck in some news headline, Trump tariffs and this and that, you know, this is very recommended. If you understand how markets work, you're slightly angry at the world and you're cynical, this will really take your investing to a new level because you already get it. From a psychological perspective, you already understand the news doesn't really control things. The news is the effect, is the core. So if you've been around for a long time, you've already had a hunch, and now, well, I'm telling you, that is how the markets really work. This masterclass will be very valuable to you. Honestly, I'm giving it away. I've been told not to give away that much information, but you know, the way the markets are, it's important for people to know that. So that is the take here. Very important changes have taken place here. Okay, like I said, if I were to show you a stock of PayPal and Roku, they've already topped in the first crash. So that is the issue. The index will make a new high. That is my primary count. I'm not convinced Nvidia, Apple, and Meta, and a few others are going to follow it. Okay, and eventually, you cannot have the value of the fruit basket continuing to rally and rally and rally when the individual stocks, pretty much all 500 of them, minus one or two, are all going down. Eventually, S&P will undergo a huge correction. That's how every market always tops, and that's the confusing situation that we're in. So specifically on Apple, I think it's topped, and I think it's formed a very long-term top, and I can count a completed wave count from the Genesis, and by that I mean 1980, which is probably longer than most people listening to this have actually been alive. And I can count a 5-wave count. So once you can count 5 waves, and the fact that it's taken us, damn near 50 years to get up there, obviously we have a huge problem. Now, are we expecting a move to 1? Obviously not. It's not mathematically possible for it to be 1. But we can't expect to pay this anymore. Now, we used to be able to. Pre-COVID, around Trump, around first YouTube video, I was very happy paying 30 price over earnings, but not anymore. So we're getting a huge price over earnings contraction. What value price over earnings would you put on Apple? I would say 10. I would say 10 for any stock, regardless of it being Apple. Any stock in a good sector that's popular with retail traders, that has a good looking chart, I would buy at 10 price over earnings regardless. But for Apple specifically, I don't think you can buy this stock now. Forget about the chart. I mean, the chart tells me it's going to go 60, and 60 actually would get you a price over earnings of about 10, and it's ridiculous because people are happy to pay 30 price over. Well, they were, not anymore. We're 15 years since it's 2008 low, so to me that goes to at least 10 price over earnings. I don't think you can pay 30 anymore. To me, we're going to get a huge earnings contraction there, or a P over E contraction, and basically that gets you, I would say 60. Whereas the COVID low was around about here, there's no reason why we can't take out that low. So 196 is too high. And then, Facebook, last time I checked, was around 30, 35. Once again, the problem is you can count a completed wave count, and this is the problem, right? So 1, 2, 3, 4, 5, right? Yes, it's a very funky looking wave 5. The highest target I had was 666. 4 does not cross into the 2. That was the first ABC. So once again, that is a 13-year cycle. 13-year cycle going up. So what do we know? That's what we know. And we've shown a 200-week moving average. If you have a look at some blocks here, that would be an interesting level, 384. So we're nowhere near done. This could get... I can't give you the accurate wave count, but I'll just show you here, see if there's any blocks. There's no 6-month block. There's no 3-month block. There's no 2-month block. Is that a red block there? So we're looking... These are monthly order blocks. There's one here which is going into. So before earnings, we're going to get a fake pump here. To me, 384 minimum. And then is that a monthly block down here? That there has to be. Yeah, here. So... there's no reason why that can't take off. You can take off another 40-50% out of there. So we discuss all of this within the group. So if you want to know more, come and have a look at the Facebook group. So we'll bring it back to the S&P. I don't want this video to be too long. So the overall message is there is great damage occurring within the stock market, but you have to be very clear what you're investing in. We've been speaking about this cycle for a very, very long time, and we're basically approaching the wave 5 terminal top. As of right now, you cannot call the grand super cycle correction which we have been forecasting very accurately over the last 7 years. There is one more wave up on the stock market, but what's confusing everyone, and rightly so, it's not confusing to me, is that many of the individual securities have actually topped, and they've topped for a long time. And once something has topped, the only reason to buy any stock is to say, is it going to double in the next year? There's no other reason to ever buy a stock unless you're a dividend investor or you're rolling with 8-9 figures. Maybe then it's justified. You have to be looking for a double. Is Apple and Meta going to double from here? I don't see it. So there's one more wave up here on the index level. Short term, we're looking for a repeat of 5,000. I expect that to be in lower volume. I'm only going to change this count on the S&P if we break around 46, 45. And I'm not just talking about a wick. A wick is okay. If we break down there with heavy volume, then everything changes. And if that happens, we have to rework the entire count. There is the back of the pocket count where we have topped here. Then we're going to undergo lots of damage, basically. This is a very important time for the S&P. Very important time for the S&P. Anyway, on SPXL, I mean, I'm convinced there are people holding SPXL from the top, so it makes sense to shake them out as well. So anyway, that is the short-term, medium-term, long-term count. If you want to know more, come and join the group. We've been doing this for a very long time. We've called this move perfectly. We share messages all day long in the group. That is a 500-point move on the ES, right? So that is it's $50 a contract, so you can do the math. Now, this is all 100% forecastable. 100% that was forecastable. It's got nothing to do with the news headline. If you've taken the masterclass, well, you've basically paid it over. I mean, you've just paid it off. You've paid it off by 50 times in the space of 2 hours, right? Honestly, I'm giving away that much information. There was always going to be a squeeze there. But now everyone's FOMO'd in long. So you have to wing it back down again, shake them out, and then you get the real move. But is Apple going to make a new high between now and the end of the decade? I'm not too sure. Anyway, I'm going to wrap it up there. Good luck to whatever you're doing, and we'll see you guys in the group.